Everyone thinks the US dollar is the strongest currency in the world, and for most of our lives, it has been. But what if I told you the dollar isn't collapsing in some loud, dramatic explosion? What if it's dying quietly, not because of a war, not because of a recession, but from a slow, invisible leak that almost nobody is paying attention to? This story doesn't start with inflation or money printing, although those are part of it. It starts with something much more fundamental: trust. The entire global financial system, the one that powers your phone, your car, and the food in your grocery store, works because countries trust the United States to always pay its bills. This belief, this absolute faith, allows the US to do something no other country can. Buy real, tangible goods: oil from the Middle East, minerals from Africa, microchips from Asia using nothing but iOS printed on green paper. For decades, the world accepted those dollars without question. They were as good as gold. But recently, something started to change. Foreign trust in U.S. debt began to waver, hitting its lowest point in over 20 years. The numbers just stopped adding up. America's national debt soared past $34 trillion, and it was growing faster than the economy, faster than tax revenue, faster than logic itself. Quietly, in the finance ministries and central banks of countries all over the world, officials started asking themselves a dangerous question: if this were any other nation, would we still trust this currency? And for a growing number of them, the honest answer was, probably not. So, the world didn't just sit around waiting for the dollar to collapse. It started building alternatives. The BRICS nations, Brazil, Russia, India, China, and South Africa, began experimenting with trading directly in their own local currencies, cutting the dollar out of the loop. Major oil contracts, for the first time in generations, started being settled in Chinese yuan instead of dollars. Gold-backed digital payment systems started to appear, offering a way to transact outside the traditional banking system. In Africa, the Middle East, and Southeast Asia, nations began building their own regional payment rails, creating financial highways that bypass the dollar completely. Now, let's be clear, none of these systems are perfect. Not a single one is big enough to replace the dollar overnight. But here's the twist that most people miss: the dollar doesn't need a single, giant replacement to lose its power. It only needs the world to use it a little bit less. Just a tiny fraction less each year, and that is already happening. While this global shift was quietly beginning, the United States accidentally stepped into a financial trap of its own making: higher interest rates. To fight inflation, the Federal Reserve raised rates, which seemed like the responsible thing to do, but this had a catastrophic side effect. The cost to service the enormous national debt exploded. By 2025, for the first time in modern history, the U.S. government was spending more money, paying interest on its old debt, than it was spending on its entire national defense budget. This creates an impossible math problem, a doom loop. To keep paying the ever-increasing interest, the U.S. government has only three options: slash spending on essential services, raise taxes significantly, or print even more money. Cutting spending is political suicide. Raising taxes is a surefire way to lose an election, which leaves only one realistic path: print more new dollars to pay for the old dollars, and every single new dollar that gets printed quietly devalues all the existing ones. It's a silent tax on everyone holding dollars. At the same time, foreign countries did something subtle but incredibly significant. They started selling their U.S. Treasury bonds. Not in a sudden panic that would crash the market, but slowly, consistently, month after month, year after year. China reduced its holdings. Japan, the largest foreign holder, reduced its holdings. Saudi Arabia and other oil-producing nations began to diversify away. Even close allies of the U.S. started quietly shifting their reserves into other assets. When foreigners buy fewer of America's bonds, who is left to buy them? The U.S. government and the Federal Reserve are forced to step in and buy their own debt. And how do they do that? By creating new money out of thin air. It's like a restaurant that starts secretly buying its own unsold food at the end of the night just to keep up the illusion of being popular. Eventually, the illusion breaks. This process, known as monetizing the debt, puts the dollar's decline into overdrive. This is why the common narrative about the dollar's future is wrong. We've been conditioned by movies to expect a dramatic crash, like the 2008 financial crisis on steroids. We picture stock markets plummeting and banks closing. But that's not how empires of currency usually end. The US dollar will not collapse, it will fade. Bit by bit, its role in global trade will shrink. More countries will sign agreements to trade in their own currencies. The dollar's share of global reserves will slowly decline from 60% to 55% to 50%. The debt will keep growing faster than America's ability to pay it back. Confidence will erode, not explode, on any given day. Nothing will seem that dramatic. But when you look back over a decade, you'll realize that everything has changed. For the first time in 80 years, since the end of World War II, the world is moving toward a multi-currency system. A world where economic power is shared between several major zones: North America, Europe, and an Asia bloc led by China. It will be a world where no single country's money can be taken for granted. In that future, the dollar won't be worthless, it will still be an important currency. It will still be powerful, but it will no longer be invincible. It will be just one of the major currencies, not the undisputed king of them all. The real question, and will the dollar die? It's what does the world look like when it finally stops depending on a single, dominant currency? Because that future, in some far-off prediction, it's already being built, quietly, all around us, and it's happening much faster than most people think. Thanks for watching.